Your market news now. Bonds fell and the dollar rose as roaring U.S. retail sales had investors battling on the interest rates staying higher for longer to temper demand. Those stock markets were focused on the bright side for earnings and climbed a little. The U.S. dollar index is eyeing a third weekly gain in a row and the longest streak since September, when the index was galloping towards a 20-year high. We also had diversified mining and metals company South 32 almost halving its interim dividend as profit dropped and cash flow was lower, and it spent more on capital expenditure, resulting in higher overall production and commodity prices retreating from record highs. To talk to us about the latest when it comes to market aspects, we are joined by Sean Dendere, who is a senior sales trader at Triumph South Africa. Sean, thank you so much for your time. I mentioned in my intro about that bumper US retail sales figure. Your take on the market reaction following that print?
All right. Thank you for having me, Nastasia. So with regards to, the retail sales data that's just come through from the US, I think that was really positive, way above expectation. Market reaction, I see that, post CPI data the day before, stocks were slightly higher, but I think today they are slightly lower, just purely on the basis that the data is showing that the labor market in the United States is tight, and despite the high interest rates, consumers are still spending. And then from an emerging markets point of view, I think the emerging markets are reacting positively to, the news coming out of the US, purely because, we are hopefully not going to head into a recession from the US perspective.
So, following this retail sales print as well as the US CPI, and if you take it back to last week where the Fed Chair Jerome Powell said that we're entering a disinflationary process, or rather that it has begun, do these two figures, retail sales and CPI, contradict that view, or how are you reading it?
All right. In my view, I think I support, Jerome Powell in his analysis of it. Because if we're looking at CPI data, last year in June, they were reaching a high of 9.1%. And then we are down to, the mid 6.6% range there. So we are showing, a slowdown in inflation. What is tough is that, the job data in the US is affecting, the speed that the inflation is going to decrease at. But I do agree with, the disinflationary view that, you pointed out last week.
Earlier today, we aired an interview that I did with Jeff Jennett, who is the CEO of Amira Property Fund. When you look at the listed property sector with a backdrop of recessionary risk, weak consumer demand, as well as load shedding, what's your view on that sector? Do you see any value?
I always think that, from emerging markets and stocks in emerging markets, and specifically South Africa, are undervalued in my view. Looking at the property sector last year, I think they had a negative return actually, and that was purely based on, slow growth, inflation, the war in Ukraine. I think the war in Ukraine mainly affected, overseas companies as opposed to locally. And with, a bit of stability this year with regards, to the interest rates and the inflation, I do foresee, in my view, that, the property market might stabilize, because in South Africa, the property market has been... Am I still there?
You're still
in
here.
South Africa, great. In South Africa, the property market has been operating in an environment where inflation is not, the lowest compared to, our world counterparts. Growth is also not the highest compared to our world counterparts. So I do see some form of recovery in our property sector this coming year.
We're getting to that period where some of the South African listed companies will be releasing their earnings. What are you going to be paying attention to, and which sectors?
So I think I'm going to be focusing on mining and retail, right? So I'm going to just lead off with retail. So we're looking at our four big, retail shops. So that being Woolworths, Spar, Checkers, Shoprite, etc. I think it'll be nice to keep an eye out. I was having a look at Woolworths. So Woolworths right now currently has their highest share price since 2016. And for me, from an earnings perspective, does the share price mean that, the earnings are going to be great? We don't know until obviously they're announced. And based on that, I also wonder how, they're going to fare due to, the high inflationary environment that we have been living in the past year. So it'll be interesting to see how they fare from earnings, the big four. And then mining will be another sector that I'll be looking at due to the fact we are currently in an energy crisis in the country. So if we're looking at a lot of the mining companies, they've had to curb, productivity and the like. And obviously, well, not really obvious, but there's been a lot of input costs in diesel due to the fact that, they can't necessarily rely on the national power grid. So I'll be looking at that. But it is also interesting. I mean, Anglo, or ArcelorMittal Steel, actually released their results earlier in the week, and they actually beat their expectations. And from their perspective, they're expecting, higher demand with regards to, their products. And I expect the same, for the other mining companies. I think the main thing that will really affect this industry is how we deal with the costs that they're incurring due to, the load shedding crisis that we're currently experiencing.
Sean, let's leave it there. Thank you so much for your time. That is Sean Dendere, who is a senior sales trader at Tribe South Africa. Of course, we're also going to be looking at comments coming out of another Fed chair, and that is, of course, Tom Barkin. He is the Richmond Fed president. We'll be listening to any nuances, any hints we can get in terms of some of the risks that they are seeing, given the fact that we've got these hot CPI prints coming out of the US as well as the retail figures. But that is it for me. We're going to take a quick break, and when we come back, we'll have more news for you, so stay tuned.